else will be hearing ourselves.
Right. So we've got audience members listening in right now. Welcome to Thrive Live. How's everybody doing? So yes, this is our inaugural episode of Thrive Live, and we're working on our hand signals and stage directions here in order to make sure that we're bringing you valuable content. And so yeah, that was kind of a clever one. So I'm James Duncan, Director of Marketing and Engagement for Thrive Mortgage, and we're so thrilled that you joined us today. Joining me here in our studio in the North Austin area, Central Texas area, Darcy Madison. Darcy, introduce yourself to the family.
Digital Content Coordinator here for Thrive Mortgage, and super excited that you guys are here with us live in the studio. This is going to be exciting and a great journey. So thanks for joining us.
Well, this is something that we've kind of been dreaming up for a little stretch of time here. And Darcy, this is kind of your brainchild. So tell us a little bit about what was your motivation for wanting to do a live broadcast on our YouTube channel?
Yeah, so initially I was just thinking, as a consumer, as a person living in this kind of crazy world right now, working in an industry that seems kind of up and down and a lot of changes and shifts and things like that. And just personally, like, not a huge fan of news these days for me. It seems a little bit discouraging and depressing. And so I guess it just came to me, like, we're the experts in the industry.
Right.
That's what we do. And so we should be the people bringing the right news in real time for people so that they can make really good decisions for themselves and for their families, for their futures. And as a teacher in the past, like, knowledge is so important, and I feel like education is key to help you make those good decisions. And so came this idea to go live to talk about real issues going on right now that are affecting the industry and how that affects the consumer, as well as professionals in the industry. I think, in order to help consumers the best possible, you have to be knowledgeable about what's going on. So I thought this could be helpful also for industry folks and professionals, not to have to search so many different platforms, read so many articles, blogs, podcasts. If there was one central place they could come to get the best news, we'll take the time to do the research and bring it to you guys in a short amount of time, packed with great information that you can then go forward and make good choices.
There you go. Now, I thought it was a brilliant idea when Darcy first approached me about it. And what I love most is the fact that it's not going to be just her and I every single week, every single episode. We're going to be bringing in a lot of industry experts, mostly from within the ranks of Thrive Mortgage. Occasionally, we'll have call for us bringing in an external guest that is an expert in whatever particular field. But we've got so many experts on just about any topic that you can name in the mortgage industry right here at Thrive. So what better resource than to tap our own folks? And first want to give a shout out to the folks who are watching us live. Hello, Michael. Hello, Anna. And want to welcome y'all to Thrive Live. Basically the format of this show is every week is going to be a different topic. It'll be something pertinent towards what's going on in the mortgage industry, and so, like I said, we're going to be bringing in different people every week. Sometimes we're going to be talking about what's going on in the financial markets, and we'll be bringing in our Chief Financial Officer, Michael Jones, for those conversations. Because you want to talk about somebody who knows financial markets backwards and forwards, that would be Senior Michael Jones. As a matter of fact, earlier this year, Housing Wire named him as a 2022 financial leader, and so that we're very proud of him. But we'll have Celine Kellum, our incoming CEO. She'll be joining us from time to time. Who are some of the other folks that we'll be bringing in?
Yeah, we've got Brian Hurd, who works with our building
construction master.
Yep. And we got Tay Tolliver that'll be coming in.
Love Tay. Oh. Tay's fun. You definitely want to tune back in for the episodes that we have Tay.
Yeah, I mean, those are some of the ones we've got, I think, coming up soon. But this will still be growing.
Yeah, it'll be an ever-expanding list. But I think one of the big things, you kind of touched on it in the setup, is kind of the motivation behind why we want to do this. And it's all about educating. Darcy mentioned that she's a former teacher, as am I. And so we're all about empowering folks through knowledge and through education. And there's a lot in the media that if you just pay attention to headlines, you'd think that the sky is falling. Oh my gosh, it's 2008 all over again. So one of the things that we kind of want to cover is that there's a lot of directions that we could take this conversation, but I think we should probably start there. What do you think?
I think that's great. And the other thing I love about going live, which is one of the reasons we decided to go live, is that you guys can chat questions while we're talking here with you. And so if you brought questions with you, go ahead and start chatting them right here, and we'll try to answer them in this broadcast.
In this format, absolutely.
Yeah.
Well, I guess I'll tee it off with just this one caveat, and this is something that I share, whether it's somebody that is a client of mine or a partner or just somebody I get engaged in conversation with, and they ask me questions about what's going on in the housing industry. Something you need to understand is that the news media, especially the major news outlets, are usually on about a 24 to 48 hour lag in terms of when something actually happens and when they start reporting it in the news. So what they're saying about interest rates going up, obviously they have been spiking up this year. We're a far cry from where we were when we started 2022. There's a lot of reasons for that, and we can get into the details and the nitty-gritty of all that. Obviously, housing prices have appreciated considerably over the last couple of years. I mean, it's been about nationwide. I think the average rate of or the housing values or house appreciation increase has been somewhere in the neighborhood of like 40%, just depending on what statistics you trust or you read. It's like 42.6%, I think was the exact number that I saw the other day. And that's astounding, and that is not normal. And what we're seeing right now, this is kind of a perspective that most people need to understand, is that what we're seeing right now is actually the norm. Like the last couple of years have been the anomaly. That the 2019, 2020, 2021, that was not the norm, and rates were actually artificially low for a whole host of reasons. So what we're seeing right now, if you go back like the last 40, 50 years in the mortgage industry, where we're at, like hovering around the sevens right now, that's actually the average interest rate that we have historically seen. And I think what's shocking most people is the meteoric rise that we had from where we were at. Like we were in the mid to upper twos towards the latter half of last year, and they started kind of creeping up, and then February came along, March came along, and they just skyrocketed.
Yes.
So that's one thing. So the big message in all that is perspective, and just keep perspective. The housing industry, real estate in general, is still a very, very solid investment. And it is documented that owning real estate is one of the best ways for folks to accumulate wealth over time. And it's not a short-term investment, but you want to treat it the same way that you would any investment. There's going to be risk and there's going to be reward. You just got to be smart and you got to have a plan. And the folks who have a plan going into this, they're the ones who usually are going to come out on top in the end. So so where do you want to take the conversation from here with that setup?
Yeah, well, Michael has a question.
All right, let's cover Michael's question.
So he said, if something big happens in the industry, will we do a Thrive Live to inform the public before the next scheduled live? So like a breaking news type of situation.
That is a fantastic suggestion, and my response to that is maybe. It depends on what that breaking news. If it's sufficiently big, the Fed comes out and decides that they're going to cut rates 250 basis points. Yeah, that's pretty substantial, seeing as how many times they've raised it over the course of the year. But yeah, we'll definitely give that some due consideration, and because it's pretty easy for us to set up pretty quick on doing these lives, and so we might just do that. That's an excellent suggestion, Michael. Thank you for that question.
Which leads me to subscribing to the channel. If you aren't already subscribed, make sure that you guys do that and click the bell. So if we do happen to jump in here and give you a live update in real time, you'll get a notification and be able to
Absolutely.
to get on the YouTube channel and not miss that.
Never miss a critical update.
Yeah.
Well, what else do you want to know, Darcy?
What do you think? I mean, considering the current market where we're at, what type of a loan program do you think a consumer should look into?
That is an excellent question. And just like my answer to Michael's question, I'm going to answer with the arbitrary, it depends.
Right.
One of the cool things about doing what we do is that we take pride in being mortgage loan advisors who are truly looking after the best interests of our clients. And that's not just spend. That truly is what motivates us. There are a lot of let's say professionals in the industry who treat mortgages as a transaction or treat it as a commodity when it is anything but. And when you are working with a professional loan officer who treats a mortgage as a wealth generation tool and as a strategy, that really changes the conversation. And so one of the big things that I think you need to be looking for, whether you use Thrive or whether you use whoever you use, it doesn't matter to us. I mean, obviously, we'd prefer you to use Thrive, but there's something that every consumer needs to go into this process with an understanding of, like, this is a big decision. This is not just this is way bigger than financing a vehicle. Obviously, we're talking about hundreds and thousands of dollars over the course of a very long stretch of time. So you need to approach this with the right mindset, with the right plan, and a professional mortgage advisor can help you come up with that plan. So as far as determining what's the best loan scenario or what's the best loan program for you, to the consumer, just in your unique financial situation, it's really just taking a look at the whole picture and trying to get an understanding of what are your priorities, what are your long-term financial goals, and being able to develop a mortgage strategy that's going to complement that and help you. Like, if you've got a bunch of assets right now and interest rates are really high, obviously maybe it's in your best interest to put a little bit more into the house, maybe more than 20%, and then dropping that loan amount and doing that way. Other situations, maybe you want to hold on to more of your cash because maybe it's performing very well for you wherever you have it invested. So maybe you want to put a little less into the house, and you're okay with the interest rate because chances are good they're going to drop in the future below the level that they're at, and you can always refinance. So it takes somebody asking you the right questions and you asking the right questions as the consumer to know exactly what the right loan strategy is for you. So I mean, throw a stick and you'll hit a different kind of loan program that's out there, and so it can be overwhelming for the uninitiated, especially if you don't have a trusted guide. So make sure that whoever it is that does your loan, make sure that you are asking a lot of great questions. If you don't understand something, even if they have explained it to you before or you think they might have answered that question before, ask it again. And if they get upset about it or they get impatient with you, you're dealing with the wrong person. A trusted mortgage advisor is somebody who is going to take the time to fully educate you on what you need to know. So make sure that you're keeping those things top of mind.
I think that's really important to remember. I know, way back when I was buying my first house, even maybe my second or third house, I never thought about asking a loan officer those types of questions, like what are the options of loan programs, or like you were saying, talking about my future financial goals. What should I do with these assets now? Should I put more down on the house? Like all of those different options, I wouldn't have even thought to ask my loan officer that.
Yep.
I thought it was pretty much cut and dry, and here's your one program, and everybody fits into that one box. But that's certainly not the case. So I know at Thrive, there's so many programs that we have available, and your financial goals really play a big role in, where you go and what program fits you best.
Gotcha.
So,
I think we got another question.
Yeah. So Ashley, and you talked a little bit about refinancing, but her question is there any penalty to refinance if rates go down? So I'm assuming, you purchase now at what we think is higher rates, although they're really pretty average, what we were just talking about, but higher than they were.
They're higher than they were 12 months ago. Yeah. We'll put it that way.
So you buy now at these higher rates, is there a penalty to refinance if these rates go down?
That is an excellent question, Ashley. I'm very glad you asked it. If you went through, let's say that you got just like 3 months ago, you closed on a new house or closed on a refi transaction. You closed on the mortgage transaction, and let's fast forward another 6 months. So now we're in the middle of 2023, and rates drop. Hypothetical, let's say rates drop through the floor. They're down the fours, and you're sitting at 6.5 or something like that. Then no, if you went through a mortgage bank, then you should look at the closing documentation to make sure that there is nothing in there that would be labeled as any kind of prepayment penalty. Now, this is something that was really big back in 2008, before the Great Recession, before the bottom dropped out of everything. And this is one of the changes that a lot of regulators and the folks that write the guidelines. This is one of the changes that they made, is that they eliminated, not all, but they eliminated most prepayment penalties. And so we should actually, that should be one of our future episodes, is going through what the definition of like a qualified mortgage, because this is a key distinction. Chances are good. So short answer, actually, let me get to the point. Short answer to your question, Ashley, is no, you should not have a prepayment penalty as a component of your mortgage if you got an existing mortgage. They eliminated that for the vast majority of mortgage programs. They eliminated those a long time ago. There could potentially be a prepayment penalty if you got something known as a non-QM loan. That's basically just like a non-conforming loan, meaning they went outside of the norm of like conventional financing or traditional conforming financing. There might be the chance you would just have to look through your the closing documentation that you signed at your closing appointment to determine for sure whether or not you've got a prepayment penalty. You can always, if you trust the loan officer that you worked with, you can always pick up the phone, call them, and ask, hey, that loan that you closed with me, did that have a prepayment penalty associated with it? And they should be able to tell you. And if you trust them, then you can take their answer. But you always want to verify with going on through the documentation of what you actually signed. So hopefully that answers your question, Ashley. And if it doesn't, or if you've got more questions, reach out to us. We'll be happy to look over it with you and give you tell you what's what.
So this actually leads us into the next question, and
Sure.
I think it's one that a lot of people are asking right now. Mm-hmm. So if there isn't a penalty to refinance, when hopeful the rates do drop, is now a good time to buy?
Now is absolutely a good time to buy. I mean, and that's going to be my answer no matter what's going on in the market, simply because of the historical track record that real estate has with being a wealth generation tool. There is obviously things have cooled off significantly. Inventory is actually not the issue. Affordability is the issue. And so there are homes out there. You might be sitting out there saying, yeah, easy for you to say. I just put in 6 offers over the last 6 months. Every single one of them got beat out on. Well, yeah, I'm not saying that that's not going to happen, but this is what my message has been to clients as well as to other folks, is don't make these purchase decisions based out of fear or based out of panic. That is the wrong headspace. That is the wrong place to be when it comes to making a decision of this magnitude. So the answer to the question is always going to be a good time to buy. But the bottom line is right now a good time to buy for you, because your situation might be a little bit different, where if you took 3 to 6 months to maybe work on some issues that put you in a better position to buy, or if there's any kind of uncertainty or any variables that are outside of your control, maybe right now is not the best time for you. Mm-hmm. And so that too is a question, or is a conversation that you can have with a trusted mortgage advisor who's going to be able to steer you the right direction. And they'll also, if they're of the right mindset and the right temperament, they should also be able to introduce you to some partners of theirs, whether it be realtors or financial planners, accountants, probate attorneys, or estate planning attorneys, folks of that nature. That should be able to introduce you to other professionals who would be able to have similar conversations with you, regardless of whatever it is, whatever that particular priority is that you're facing right now.
Awesome.
That answer the question?
Yeah, I mean, I think if you're renting, you're paying somebody's mortgage.
Yeah, everybody is paying a mortgage. Yes. It's just a matter of whether you're paying your own or somebody else's.
Yes, yeah. So I mean,
I prefer to pay my own.
Exactly. I mean, if you want to own a home, like,
There are ways you can get
yes,
it done.
call us.
Absolutely.
Somebody can work with you. Okay, next question.
Okay.
Besides the down payment, what are the costs that you will need to pay at closing?
How much time we got left in the show? There's a handful of different types of closing costs. They're actually this is something that kind of surprises a lot of consumers, especially first-time home buyers, is that most of the fees, most of the costs and fees that you pay at closing have very little to do with us being the mortgage lender. There are county fees. There are fees that you would incur regardless of whether you paid cash or got a loan. It is in your best interest. If you're paying cash, you don't have to get an appraisal. You don't have to get an inspection. But oh my gosh, are you not being very smart if you don't? So there's a number of things that you're going to pay. Title fees are going to be a component of your total cash to close. And basically title fees are just paying a title company to do a due diligence on a whole bunch of, like a lot of people don't even know what title agents do. We should have a title agent come in and say, okay, what exactly are you doing for this $1,800, $2,000 that I'm giving you? And have them explain it, because it's actually, they are doing a lot of heavy lifting for the consumer in terms of purchasing the house. But basically title offices or title officers are doing a whole bunch of due diligence on the history of the house, and they are making sure that this particular property is free and clear of any encumbrances, also known as liens, and making sure that you as the new owner won't come into like some really unpleasant situation and be like, what the frick? There's a mechanic's lien on this house, and now I'm on the hook for it. They make sure that all that stuff stays clear, and just doing a whole bunch of other stuff. So in addition to your down payment, you've got those title fees. You typically have you may have a fee for the appraisal. There's other smaller fees that we are getting charged, and there are certain fees that the agencies or the guidelines that we have to follow prohibit us from adding any markup on that. Like it'd be stupid. Like I think our credit report fees are somewhere around $17.50, not $1,705. They're like $17.50 for a credit pull. We just issue that as a straight line pass through to the consumer. We don't mark it up. And that was one of the things that got a lot of lenders in trouble a long time ago, is that they were adding some markups to some of these fees. Well, in our opinion, that's stupid. Like we're not looking to, we don't want to have to nickel and dime our consumers. So the vast majority of the third party fees, that's what we refer to them as, a vast majority of those fees are just straight line pass throughs. And then there's, let's see what else is there. Oh, there's also the amounts that we're collecting to set up your escrow accounts. So if you're going to pay your insurance and your property taxes out of pocket, then that's not something that we'll collect for, but that's something that we'll need to know up front. But if you are going to roll those in or pay those as a component of your mortgage payment, we have to collect. Those are called what we refer to as prepaids, and so we collect certain amounts for that at closing, so that we can set up your escrow accounts, or so that the servicer can set up your escrow accounts for you. And so every time you make your payment, a little portion of your payment is put into that escrow account. And then your servicer or the investor that bought the loan will then make those payments for you, so that you don't have to be out of pocket this big, huge lump sum every single year. It's just kind of it's more of a convenience for the consumer.
That's a really good question, again, to ask your loan officer, because your loan program might have different fees and things that you have to consider. And
depends on the program.
Yeah, so that's a good question to ask your loan officer.
Absolutely. Oh, one last thing, and the way that and this is also a change stemming from what happened in 2008 and 2009. The document that you will receive when you're under application with a lender, the document you will receive that clearly delineates all of the fees that you are being charged, both what's initially disclosed as well as what goes out to you prior to closing. There's two documents that you really need to pay attention to. One is the loan estimate. That's going to become at the beginning of the application process. And there are certain fees on there that are locked in. When the lender discloses those to you, they cannot change for any reason other than the borrower making a change to the terms of the loan or something along those lines. So the loan estimate is one of the primary documents that you need to focus on at the very beginning. And if you need some help understanding how it's outlined, they tried to make it more consumer friendly. In my opinion, they actually jumbled it up even worse than it was before. But that's nobody asked my opinion. But the loan estimate and the loan officer that you're working with should be able to explain it to you very clearly. The second document that you need to pay very close attention to is the closing disclosure. And a closing disclosure looks remarkably like the loan estimate, and you can go line by line and see what's changed versus what hasn't, and do a side-by-side comparison of the two things and make sure that that's giving you the right information.
Awesome. All right, do we have time for one more question?
I'm sure that we do.
Okay, one more question. What are your thoughts on a home inspection? Yes or no? Yay or nay?
Absolutely. I mean, you never know. I mean, unless you're a builder, unless you yourself are an appraiser, or unless you just know, I mean, it's like your umpteenth house and you're an investor, always get an inspection done, because these guys are licensed, and gals are licensed professionals. They know exactly what they're looking for. They can find even the smallest thing that could lead to big dollars and or big expenses and repairs down the road. So definitely it's like most of them are like around $75, maybe $150 if you add in a pest inspection. It is well worth the peace of mind to get an inspection report before closing on any deal. Like, that should be the first appointment that you're setting after your contract gets accepted. So absolutely get an inspection.
Yeah, it's part of protecting your investment. I mean, especially at what home prices are nowadays.
Yeah.
I mean, this is a huge investment, and this lets you know exactly what you're getting into. I mean, you can see a lot of things with your naked eye on the outside, but there's things hidden that you don't necessarily see unless you are certified to do that. So 100%, yeah, get your home inspection.
Now, there is also the flip side of that coin, in that if you're going through a house and you see this little hairline crack in the paint, it truly might just be a hairline crack in the paint. It does not mean that the foundation is falling apart. And an inspector will be able to tell you the difference.
Yes. So, for sure. Very good. I think that's all the questions we have for this.
All right. Sounds good to me. I think we've covered a good bit of stuff. Mm-hmm. I didn't even get to half of the backup content that I had ready to go in case we didn't have any questions.
Yeah. So just to let you guys know, this is meant to be a brief broadcast. So we're coming to you on Tuesdays to give you a market update in the beginning, and then answer a few of your questions towards the end of the broadcast, and then we'll be signing off. And again, this will be weekly. So if you don't get your question answered this week, chime in again next week and ask it then. Of course, we're always available. So you can reach us here on our YouTube channel, but you can also reach us on our website at www.thrivemortgage.com. Call us. There are loan officers here ready to answer your questions and help you guys out.
Well said. Well, thanks for tuning in today. And if you're watching this on either live or on replay, like Darcy said at the beginning, make sure that you've hit that subscribe button. It's like floating over above her head. And make sure that you're subscribing so that you get notified whenever we come on again, or either doing a live like this or dropping a new video on our channel. We'd love to have your comments and have your support. If there's ever anything we can do for you, just hit that web address that Darcy was talking about, and you'll be able to connect with a loan officer that's in your area.
Thanks for joining us, you guys. Take care. Have a great week.
See you next week.